Back, well, that's the point where we started off, the capital market probe. Some responses coming from him. Mr. Rotimi, Mr. Bayo Rotimi, market analyst, joins us now. Thank you for coming on this morning.
Thank you for inviting me.
Well, he gives us the impression, well, listen, this is the way it works. So, if you focus on what went wrong, without the view to see, okay, well, let's take a look at the whole picture. How does it normally play out? It looks as though that's what he's giving us, and not just asking the committee to focus on why happened or what should not happen. Give us your impression on this matter. Is that the way it should be?
Well, I think to some extent the former CBN governor was right to the extent that all over the world we have seen markets go through cycles. So sometimes markets go down, markets crash, not because of some institutional deficiencies. It's simply because the market is driven by the forces of demand and supply. So in certain instances, investors are very, very bullish. They have a bright future outlook about the performance of certain companies on the basis of which they make their investment decisions and all of that. Sometimes the reality is quite different from the anticipation. So those are the factors that will continue to mold the movement in share prices. Right now, in the last couple of weeks, a number of companies, quoted companies, have started releasing their first quarter results. The results have been largely very, very strong. And again, you will see that they are the beginnings of a groundswell of investor confidence. So when the results start to come and the results are positive, a lot more people come into the market. That pushes the prices up. So what we hope is that people will invest on the basis of fundamentals as opposed to sentiment. And it's the sentiment that creates the bubble and the bust cycles.
Which he says will always happen anyway. But what do you say to those who think that it's kind of alarmist if you tell them the stock market will always crash? Because people don't want to hear that. They want to hear, okay, look, how is it going to go well? How do I benefit from my investments?
Well, I think it is good for there to be a health warning. I think people need to recognize that there are no certainties when it comes to investment, because what you are doing is you are making an investment today and you are anticipating that at some time in the future that investment will generate positive returns. But you are not making that investment in a vacuum. You operate in an economy. You operate in a country. You are part of a world's a larger financial system. So there are a lot of variables that impact on whether that your decision will achieve its desired objective. So when you invest, all we say to people is seek professional advice, invest on the basis of knowledge, invest on the basis of fundamentals as opposed to sentiment, as opposed to second-hand information. Because once you invest on the basis of fundamentals, then 9 or 8 times out of 10, you will probably make the right call. So to an extent, I think what the gentleman is trying to say is let people recognize that just as markets would go up, there is also a strong possibility that for a variety of reasons, some of which are external to you, markets may come down. So it's good for people to have that perspective. But at the same time, you know, the returns are there. Historically, markets have done reasonably well, and will continue to encourage people to participate in the markets.
What you said, your very first opening sentence was to an extent. You know, the former CBN governor was correct. What is the other extent that he did not make, that is left unmentioned?
Well, I think that historically, the CBN in Nigeria, I think starting from 2004, under his leadership, when the consolidation of the banking industry started, I think his vision was to create stronger banks for Nigeria. Create banks that have the capacity to support infrastructural growth and development. So we understand why he championed a consolidation or a capital raising exercise. But what a lot of people felt there was a failing in that administration, or the areas where his administration failed, was in terms of supervision, in terms of ensuring that banks had proper risk management frameworks in place, because you had banks that moved their capital from 2 billion naira to $2 billion in a space of 4 to 5 years. Between 2004 and 2008, some banks had gone to the capital markets at least 2 times, and their capital had literally moved from 2 billion naira to $2 billion. Now, when you have that level of capital, without proper risk management frameworks in place, without a clarity about what you want to do with the money, there is every likelihood that some of those monies will end up in speculation. And that is really what we saw. Nigerian banks were funding speculative activities. So I think that was a failing on the part of the CBN, because that supervision that was required to ensure that this larger capital is adequately utilized, I think we did not quite get that right.
In other words, it brings us to the argument to which almost everyone the world over has been talking about. It has to do with supervision, over-supervision, under-supervision, or adequate supervision. Which did we experience before we got to this stage?
I think we have gone through various cycles of each one.
Oh, really?
I think so. I think that ultimately in the between 2004 and 2009, I think we had, in some areas, we had pretty decent level of supervision. I think in terms of direction, Charles Soludo came up with a blueprint that made sense, because he realized that for Nigerian banks to support the Nigerian economy, they must be adequately capitalized. Because prior to that, no Nigerian bank could fund an MTN or fund any upstream oil and gas activity. We always had to go externally to look for funding. So he wanted to create a platform through which Nigerian banks would have capacity to support infrastructure, support commerce, and all of that. So to that extent, I think he had clear foresight. But I think, again, maybe maybe he was overwhelmed by the sheer volume of work that is required to supervise 24 banks that had thousands of branches. But I think at that point, my view is that there was a failing, but lessons were learnt. And in the subsequent administration in the CBN, I think there was now a greater emphasis on risk management. There was a greater emphasis on increased capacity amongst bankers, because people who were participating in that industry, unfortunately, did not have the full complement of knowledge that was required to support an economy such as ours.
What about in terms of capacity for supervision on the part of the CBN lately? What has been done about that?
Well, I think it is an ongoing process. I believe that the CBN still has a lot of work to do. I think the movement towards greater disclosure, the movement towards greater accounting and financial reporting standards, I think that is excellent. And we should move to a system where we have structures, we have processes, we use technology to drive a lot of our supervision. So I think the CBN, and I hope every other regulator, is moving towards what I call the 21st century, where supervision is largely driven by process and technology as opposed to human beings. Because if you are reliant overly on human beings, there will be the likelihood that those human beings can be compromised. So let's move towards creating institutions and systems for managing risk and supervising markets.
Should we also be talking about some kind of what some have decided to call reckless spending of the regulators? Because I remember that set of questions actually came with the first panel, and some have even been worried that no one is talking about them with this same panel. Is that part of anything that could affect a near collapse?
Well, I think that the markets and individuals and participants in the market are always looking out to see what our regulators are doing, to look at what our government functionaries are doing. To that extent, if public officials do not conduct themselves in the right manner, then the public has a right to be concerned or to be aggrieved. But I believe that there are processes, there are various mechanisms through which the activities of public officials can be measured, monitored, and supervised. Every parastatal is reporting to somebody. right? Every ministry has a National Assembly committee or subcommittee that oversees their activities. So all we need to do is to strengthen the oversight functions, and whenever anybody steps out of line, the laws are there, the rules and regulations are there. Let it be applied without fear or favor, and that's all we're asking for.
Do you think that this committee has embarked on what you will call a wild goose chase?
I do not think so. I think, and I think I made this comment some time ago, I think it is always positive to allow stakeholders an opportunity to air their views. And if we take nothing else out of this exercise, I think that is definitely one positive. A lot of people have come and they have had their own time to have their own say. Now, what is critical now is how this committee will synthesize all of these various, often divergent views and put it into something and come up with a recommendation or series of recommendations that will improve the functioning and the performance of our markets. I think we are already moving in the right direction. The SEC as a body, has taken significant steps over the last couple of years to reform the market. It's a long distance race. It is not a sprint, so it is something that will take some time. But we're starting to see markets turning around. I was reading the papers today. Year to date now, Nigerian capital markets has done positive a little over 9%. So it shows that gradually the institutional reforms are starting to kick in.
Was that the impression you got at the last appearance of present DG of SEC? Or did you get that impression that it's actually SEC as a body that's moving, or it's just one individual that's moving, and it's centered on the individual rather than the institution?
Well, I do not claim to know the inner workings of the SEC, but I recognize that in every institution, whether public or private, you are likely to have from time to time some divergence of opinion and all of that. But I think what is important is for everybody to collectively focus on what the overriding interests for Nigerians would be. And I think the job of the SEC principally is investor protection, investor education, ensure efficient development of our markets. Now, I expect that the SEC, if ever they have any internal issues, I think it is a family. I think they should sit down internally, work it out, and come out with policies and programs that further the interest of the larger market. And I think we are starting to see that in terms of specific policy initiatives, because those policy initiatives are starting to yield results.
Yeah, but aren't they threatened? Because, we see the SEC when they came for that hearing, shocked a lot of people were, when they all came up and it looked as though to your tent, everyone. And so that's already out in the public. And the public, they invest in public in terms of investor education. Maybe there's some sort of education they have there, but they will run with that.
Yes.
And they will be cautious, perhaps cautiously optimistic, if you will.
Yeah. Well, I hear you. All Nigerians watch that episode, and I'm sure different people from different parts of the world also saw it. I think what we must recognize is this is an economy that is evolving, and institutions that are stakeholders or participants in that economic system also have to go through their own evolution. So you will find this kind of issues.
Yeah, but the investor like his money to go through those evolutions.
Now, the beauty is this. The Nigerian investor, fortunately, has a degree of knowledge now. They lost a lot of money. A lot of people now take professional advice before they make investments, and people can divorce some political wranglings from upsides or opportunities they see in the capital markets, which is why our capital markets are positive right now, in spite of all of the sensation and all of the focus and drama and negative press that is coming out of there, because people largely recognize that a capital market is not optional. Every economy requires a vibrant one, and people are tired of government and government functionaries doing or not doing anything. They just want an opportunity to make some investment decisions and hopefully get a decent return out of it.
But the decisions that they made at that time, where they had that near collapse, and now that you say it's stable, could the difference be that it was short-term investors that invested at that time, and now you have people who are in there for the long haul?
Well, I think that generally investors, particularly in Nigeria, learned a lot from the last experience. A lot of people came at the time with a short-term mindset. A lot of the participants in the market at that time were largely speculators, because literally you could triple your money overnight. You could invest 10 naira
that was
and
attractive
make 1,000 naira. So that drew in a lot of people, right? But because of what now happened, because the bubble finally burst and a lot of people lost a lot of money, now investors are investing based on fundamentals, based on sound advice.